get to the key events and themes this week, but let's start off in the UK. We've seen some large weakness at the open across the board for sterling, and I'll tell you why. Not one particular catalyst, but just a few reasons actually to note. But politically, being reported over the weekend in the press that Theresa May is coming under some serious amount of pressure because there are a lot of MPs that want a vote on any deal or no deal for Brexit, and there's some Remainers within Commons that have enough numbers to veto any deal from PM Theresa May. So she's coming under a heavy fire there, and we actually saw also being reported in the Sunday Times that up to 40 Conservatives are ready to try and oust May just because of this mess. It literally is. Since she's taken over, it has not been plain sailing at all. It has been extremely bumpy. Some serious roadblocks been hit for the PM. And we also saw the EU chief negotiator, Mr. Michael Barnier, he coming out and saying that the EU are even preparing for a collapse in Brexit talks. So this is a very likely scenario given the lack of progress at the moment, and this is really weighing on the pound across the board, so expect some pound weakness continuing to be the theme throughout this week. As I noted, there's some, we're heading towards a demand zone. If we do break 131 to the downside, look for support seen roughly around 130.30 up to 130.50, 80. But yeah, pressure for the pound at the moment. Elsewhere this week on Tuesday, we do have the ECB hosting a central bank meeting, actually an event in Frankfurt. We will see the likes of Bank of England's Carney speaking, Bank of Japan's Kuroda, and also the Federal Reserve's Janet Yellen. So in terms of what to look out for, firstly, with the Bank of England's Carney, we recently saw a dovish hike from the central bank, accompanying that with real downbeat and cautious rhetoric from Carney, which caused a large GBP sell-off. The market's just wanting a little bit more colour from the central bank actually in terms of their plans. As we know, in terms of future rate rises, they're going to be very slowed down. But as we see at the moment, inflation is rising at drastic paces at the moment. We do have inflation data this week. And will that force the Bank of England to move faster? Give us some more idea, Carney. We've also got Bank of Japan's Kuroda, the central bank governor. We saw last week the central bank actually did cut their near-term inflation forecast to allow them to be more dovish and ultra easy, and they're likely to remain that to be the case for a long time. This is a perfect podium again for Kuroda to try and be as dovish as possible and really try and talk down Japanese yen. So just be wary of that with your yen-based positions this week, guys. He does like to talk it down. And we've also got Yellen heading into next month. Really key. Markets are really expecting a rate hike from the central bank, even though not every bit of economic indicator warrants it, particularly inflation, which the Federal Reserve are focusing on at the moment. That's still very much subdued, and we have that data this week as well. But let's see if Yellen can provide what the markets are looking for, cementing that hike next month, an idea on 2018 rate hiking cycle. In terms of this week then, we do have the major economies reporting their various inflation data. It all is very much key. Let's start with the EU, Eurozone, 1.4%. We did see it move lower last month from 1.5%, expected to remain at that level this month. If it does come out any lower, really expect the euro to help its way on its travel south, because essentially that is the ECB's key barometer, inflation, trying to bring that back up, allied with wages in the Eurozone. So be very wary of that. Mark that on your calendars. We also have UK CPI. That's expected to tick up again to 3.1%, guys. Once again, another increase, and this could force the Bank of England to move faster than what they indicated in their dovish rate hike. So do be very aware of that. If that does come in higher, expect a large amount of pound strength. The markets are looking for something to prop up the pound a little bit in terms of the bulls. Any bit of good news, well, that's not much good news, but it will strengthen the pound anyway, and that should prop it up. Elsewhere, we do have the US CPI. As we saw last month, it did remain subdued. It is expected to remain soft this month, allied with its retail sales numbers. If that being the case, as the Fed have said, it does look very much likely that they're going to hike next month. But as we know, they've highlighted their concerns surrounding inflation. They can't continue to raise rates, and in terms of the path or the rate at which they're going to do that in 2018, as they've indicated, surely if inflation remains low, they cannot continue to raise in terms of the pace in which they're doing so now. So expect that to slow them down if inflation does remain subdued, and we will see some dollar weakness on the back of that number if it is lower, as well as retail sales data. And lastly, Bank of Canada, they're focusing on CPI at the moment. We do have the country's respective number as well. Expect to tick down again this month. Last month it did as well. We saw some large CAD weakness across the board. It's funny because the Bank of Canada did hike back to back in terms of their interest rates, and one of the key things they said is inflation is only low due to temporary factors, and they expect that to turn around quite quickly. Well, unfortunately, it's gone the complete opposite to what they've said, and it's continued to come lower in terms of inflation. So if this is lower, this number, expect Canadian dollar to get hammered across the board. Other than that, that's it from me. I really hope you have a great trading week, and thank you once again for tuning in.